Hello, welcome back. In this video, we are taking a look at Chewy, a company which seems to be soaring on earnings. If you take a look at the news here, you will see that Chewy stock soars on earnings. We will examine some of the details, but it's interesting to notice what the company is doing in case you are not aware. If we take a look at the company profile, you will see that engages in the pure play e-commerce business in the United States, provides pet food and treats, pet supplies. It's about pets pretty much for dogs, cats, fish, etc. So, interesting little company here, which has a website as well. I believe it's chewy.com, if I'm not mistaken. And what we want to kind of see really quickly is what the company did here in terms of their earnings. They came out with quarterly earnings of 4 cents per share, and they beat the estimated loss of 12 cents per share. So this is a massive beat here, as you can understand. And it compares to earnings of 0.15 per share a year ago. So you can see that the expectations were massively lower, and they ended up beating on those. And this is why the company's stock is much higher, an earnings surprise of 133%. And that makes a lot of sense on why the stock is higher right now. Okay, so what is actually happening with the stock price? How is Chewy moving today? You will see that after hours it was up 18, almost 19%. So when the pre-market hours happen and when we enter today is pretty much market actual opening. We'll see what the price is going to be, but probably we're looking at somewhere near 28, 29 bucks. I'm assuming this is where we're going to be landing. This is a $10 billion market cap company right now. It's going to be a little bit more today. And let's take a little bit of a look at the financials. Now, notice that the P/E ratio is negative, meaning that the company is not making money. It seems like it's losing money, although it's doing better than what it used to be. And the price to free cash flow is super high here, meaning that the price of the stock is very high compared to the free cash flow that they are making. Remember, this is a $10 billion market cap company before we actually take a look at the free cash flow. And of course, having little free cash flow, it means that they have liabilities that they cannot really be paid right now with the free cash flow that the company is generating. Although it's nice to see that they are growing their revenues quite some, and overall they are having some nice growth here. Now the net income is still growing as well, actually getting to positive territory potentially. Nice price to sales ratio for a company that is not profitable. We want to see that. We want to be looking at a low price to sales ratio, which means that the stock price is kind of low compared to the sales that the company is generating. This is a very nice figure to see here. Other than that, the company is generally speaking negative in terms of returns. And what we do want to see is we need to pay a little bit of a special attention here. What is going on with the revenue, the net income, 2.1 billion to 9 billion here. But notice that the company's net income was negative 300 million, yet it's growing more positive. And this is a thing that I like to see with at least with companies that are not making profit yet. They need to be doing better over the years. And Chewy is a company that seems to be doing better over the years. So it may actually be worth taking a little bit of a risk, potentially, if it's cheap enough. Now, the total equity of the company from negative to positive, but even slightly positive is much better than negative. And so it looks like the company is doing better and better here. And remember also that they have been, of course, getting some capital from shareholders, right? This is a new IPO. And cash flow statement here. Now the net income has been negative, yet we're getting a little bit of an operating cash flow here in the positive in the last few years, 2 or 3 years. A little bit of investing as well in terms of other investing activities for the company, and in terms of financing, just some little debt over here. But remember, the free cash flow is very limited. From losing free cash flow to making 8.5 million. And remember, this was a $10 billion company and it's making 8 million in free cash flow. So it's very expensive in terms of its market cap based on what free cash flow it's generating. It's an overpriced growth story pretty much. But how overpriced? Let's take a look at the stock evaluation tool. Now, the revenue growth has been tremendous for the company, although last year it was less than what was happening before these years, of course. So we're still going to go high and see what we are getting out of this. We're going to treat this as a hyper growth company pretty much, and still be conservative, of course, not to overdo it. And now the net income, the company seems to be growing into positive territory eventually. The margins are negative, yet take a look at this. They're going up and up, which is very nice to see. So I'm entering marginal profitability here with 1, 3, and 5. And this may actually happen, especially the 1 and 3. They have a big chance of it happening based on the trajectory of the company. So this is not a super aggressive projection here. It could actually happen. So I'm potentially fine with this if the stock price that I'm getting here is going to be cheap. Now, the free cash flow margin, again, we don't really have any data because the free cash flow has been all over the place, negative net income, so we'll have to use something that is rather typical instead. 13% for our annual return, and if we hit calculate, what are we getting here? Now, we are kind of close. I mean, the high price is 34, the current price is 23, the medium is 17. And even though this is a non-profitable company, I could potentially see somebody wanting to buy this one, or at least being close to wanting to buy this one. Now, we're going to be getting a higher price today. It's going to be 28, so we're probably getting a little bit further from what we'd like it to be. But if the company actually managed to achieve something like 3, 5, and 7, for example, over here, in terms of net income margin, then we're actually at our medium estimates. This is probably where we're going to be ending up today. And so this could actually be a sort of like aggressive buy, potentially, although I would still like to get it at a lower price because I have a higher risk, and I could even try a 15% annual return because of that higher risk. The company has been negative in terms of profit, and so in this case I'd like to get it at a lower price, maybe 24, maybe even 20 potentially, or 15. But it's not super far, and it may be an interesting opportunity. I guess, again, it was better before today, I guess, before the actual rise that we're going to be seeing today. It was definitely a better price, and it even went lower, I believe, at some point in the last month or so, right? Over here, like 23.31, it's about the same. Okay, so it was at similar levels. But yeah, this company is an interesting company that is, yes, negative in terms of what they are doing, but they are not that far from what I would like to get a company at. And so if it was cheap, I could consider entering. It's still a little bit expensive though, and I think I would avoid. But I do like the fact that their price is low compared to the sales that the company is generating. Yet they haven't had a track record of a lot of free cash flow and net income, of course, as you can understand. They are still in the negative, but remember, the trajectory is positive, so they could definitely become profitable soon. And this is a company that I'm having in my shortlist for taking a look at it maybe 1 or 2 years from now, maybe, or in next few quarters potentially even, just to see what they are doing, how well they are managing their net income and free cash flow, and maybe they are getting to more positive territory. Then it may actually be interesting, especially if the stock price still keeps being suppressed. We'll see about that. Thanks for watching the video. Remember to leave a like and subscribe, and also you can join us in our Discord channel or join our Patreon here and gain unlimited access to this tool. You can find links in the description box below this video, and thank you for watching this one. I'll see you soon. Bye bye.